Hey guys, welcome to my YouTube channel Finnovate. If you're new here, please ring the bell icon and hit the subscribe button. So guys, in this video, I'm going to cover the topics as follows. What is accounting, need for rules, journal, classification of accounts, personal and impersonal account and its types, golden rules of accounting, and how to apply these rules with practical examples. Accounting is the practice of maintaining records of the financial dealings of a business. It involves identifying business transactions, recording them, and summarizing the same in such a way that important financial information can be communicated to the stakeholders of a business. Accounting, also called as language of business. Now, a doubt may arise in your minds that why do we need for accounting? As you guys know that in double entry system, due to its dual aspect, every transaction affects two sides. And so past journal entries, we require certain rules to enter a transaction in a chronological manner. And those rules are called as golden rules of accounting. Now you are wondering about what is journal. A journal is a book of virgin entry where all the transactions are recorded as and when they take place. It indicates which account is to be debited and which one is to be credited. It keeps all the transactions on a daily basis. The process of recording transactions in a journal is known as journalizing. After understanding what is journal, we are going to know about the classification of accounts. There are three broad categories. First one is personal transactions. Second one is transactions related to assets and properties. And the third one is transactions related to expenses, losses, incomes and gains. So, on the basis of these transactions, there are two broad classification of accounts, that is personal account and impersonal account. Further, the personal account is divided into three types, that is natural personal account, artificial personal account and representative personal account. Further, impersonal account is classified as real account and nominal account. Come, let's understand what is personal account. Account belonging to person whose receivables, payables are termed as personal account. Here, persons means real persons and artificial judicial persons such as companies, organizations, societies, etc. So, personal account can be bank account of a company, accounts of debtor and creditor, etc. There are three types of personal account. Natural personal account, artificial personal account and representative personal account. As the name suggests, account related to human beings such as Joseph, Anthony, Kiran, Khan, etc. are called as natural personal account. As you guys already have an idea about artificial personal account. As per the ISO of law, the business entity has a separate legal entity. So, account of companies, clubs, societies and organizations are covered in artificial personal account. Lastly, representative personal account. Accounts other than natural personal account and artificial personal account are categorized under representative personal account. It reflects collective accounts such as capital account of a proprietor, drawings, outstandings, liabilities, etc. Next, what is impersonal account? As it is evident from the name itself, accounts which are not personal are called as impersonal account such as building account, salaries account, etc. As you already know that there are two types. First one is real account and second one is nominal account. Account related to firms' assets, properties and possessions are called as real account such as machinery, cash in hand, investments, fixed deposits, etc. Nominal account are the account belonging to expenses, losses, incomes and gains such as account for salary, rent, interest paid, commission received, etc. All these three accounts, that is personal, real and nominal, have two rules, one for debit and one for credit. So, rule for personal account is debit the receiver and credit the giver. That means while passing journal entry, you will debit the name of the receiver, that means who has received the amount, and credit the name of the giver, that is one who has given the amount. Next, in case of real account, debit what comes in and credit what goes out. Lastly, nominal account. Debit all expenses and losses, credit all incomes and gains. Now we are going to understand how to apply these golden rules with the help of some examples. So the first example is business commenced with capital of rupees 2 lakh. Here cash is coming into the business and the proprietor is giving the capital. So the accounting entry will be cash account debit to capital account. So moving to the next example, purchased machinery worth for cash rupees 10,000. Here machinery has purchased and it is coming into the business and cash is going out of the business. So the accounting entry will be machinery account debtor to cash account. Now moving to the next example, purchased goods on credit from Naina rupees 40,000. In this case, we have purchased some goods and goods are coming into the business and who is the giver? Naina is the giver. So, accounting entry will be purchase account debtor to Naina account. In the next example, sold goods rupees 80,000 to David and received check against it. In this case, we made sales to David and received the check against it. That means bank is receiving the amount and bank account will be debited. And what will be credited? The sales account. So accounting entry will be bank account debtor to sales account. Now the last example, dividend received rupees 1000. Here dividend is the income, so it will be credited. And bank is receiving the dividend, so bank is the receiver. As per the accounting entry, bank account debtor to dividend account.